It's commonly known in day trading that to be successful in the markets, you need to have experience. Now, there's two ways you can get this experience. You can be in the market each and every single day, obviously forward testing and watching live price action so that you are more experienced. Now, obviously, there's one problem with that. You're only going to get experience day by day, by day by day, by week, by month, by year. Luckily, there's another way in which we can gain experience. Now, it's not as good as watching live price action print because obviously you have that hard right edge. You have no idea what's going to happen next in the market until obviously it prints. You can get a good idea of what's going to happen, but obviously until it prints, you don't know. But the other way we can get experience in the market is through backtesting, and that's what I'm going to be going over today, is how to backtest, kind of journal trades that have already happened, looking back at old price data to almost trick your brain into thinking you have experience. This is one way for sure that, especially as a beginner, you can become a lot more comfortable with the market after having seen these things happen over and over and over again. Now, this week, if you didn't know, I've been in New Zealand, so I've not been able to trade my normal session, the New York AM session. So what is a kind of good thing about that is that I can do this video completely fresh. I've not really looked that much at the market. I have looked a little bit, but I've not had a really in-depth view of it. So today I'm going to have that in-depth view and essentially backtest it live for this video to show you how, if you haven't backtested and you're new to trading, that this is how you want to be backtesting, and this is definitely worth doing, especially if you're new to a model, strategy, concept, something like that. Then this is how you can backtest so that you can gain that experience, like I've said. So I'm going to do Monday, Tuesday, and Wednesday from this week, and then obviously I can't do Thursday or Friday because it's already happened. But let's start by breaking down Monday. So obviously I'll start from the weekly chart, and we have been in quite a strong downtrend this week, but I can see that we did take out some significant weekly low, which is here. So I'll identify that as a weekly sell side objective. And other than that, there's not really much else for me to note for this week, really, other than potentially the previous week's low, which I will mark out in a green color. Now, you can go as in-depth or as simple as you want with this, with the amount of things that you annotate. I'm simply going to annotate the things that I would annotate if it were me doing it live. So specifically looking at Monday's price action here, we can see that on Monday, we dropped down into this weekly sell side. And then in hindsight, because this is backtesting, we can see that we displaced up. So let's see if after sweeping that weekly sell side, there was any lower time frame entry that I could have got. So on the 1 hour chart, we can't really see any imbalances here until the 11 a.m. candle, which obviously is past my session, but we can see that these two relative equal highs are in play, and they are in fact perfectly equal. So if I look at this high up in the top corner, you can see 272.25, and then with this candle, the same number. So they are perfect relative equal highs. Very, very nice draw for me. Personally. So dropping down to the 5-minute chart, we can see that we have the draw of those relative equal highs up here that we've just identified. And after sweeping that weekly sell side, we did in fact displace up, but there was no swing high in here. So I'm going to drop them down now until I see a swing high in this run into the weekly sell side. So the first time frame we come to is the 3-minute chart. We can see we have a swing high here on the 936 candle, and that is obviously broken through and displaced to the upside. And then we come down and tap into this fair value gap right here. Now, there's a few things to point out here that I would be writing on my screen if I was backtesting, because when you're backtesting, you want to write all these things I've been saying down on your screen and screenshot it, put it in a journal. I use Notion. It's a really good software for doing things like this, if journaling in general and having a little backtest journal. But you want to be writing these things that I'm saying out loud on your screen with a text, screenshot it, drop down to the next time frame, rinse and repeat. And the main thing with backtesting is you want to talk about how it was really cool to see it. You want to talk very positively, both in your journal and when backtesting, especially in your journal. But for Monday's price action, we can see that clearly that was an entry there. Stop loss would go there. And I can see that it dropped right down into the midpoint of that fair value gap. And then I would simply extend that up. That would be my target. Obviously, I would probably take a partial at this high here, or maybe even draw a fib from my entry to my final target, and any high above this yellow line could be a potential profit-taking level. So for even new levels that we cross into here, once we cross above this and make the swing high and then come above it again, that could be a potential for a take profit. So all these things I'll be writing down on my screen and screenshotting and putting it in the journal. And personally, I would put an emphasis on how cool it was to see how price reacted exactly off the midpoint of that fair value gap, because that is exactly what you want to see when you're in a trade. And I would also put an emphasis on how these relative equal highs were formed, and then they were the clear draw for that AM session. Went right up to them and then came down, consolidated, continued higher, but again, then you need to be content with getting enough here. You don't want to be thinking, oh, if I held the trade even further, I could have made more. Obviously, that's always going to be the case. Price is most likely always going to have ran beyond your target, but the important thing is you got out at your target. So that is what you want to focus on there. Moving on to Tuesday's price action, we can see that we had this daily fair value gap form now after Monday had finished, and I'm drawing it from the candle close up here because these candles aren't completely connected. If I just zoom in, you can see that there is a small gap between those daily candles. So I'm going to draw it from the close of the candle to the high of Monday's candle here to get the correct measurements. Anyway, on a day like this, I could look for a move into this fair value gap, maybe targeting the upper quadrant or the lower quadrant, and also looking to maybe target this order block here, which, as you can see, for the rest of that week, the bodies did not close below the low of this order block. You can use the bottom of the wick in an order block when it has a very long wick like this. Obviously, there are two sensitive levels in an order block, the body, and if it has a long wick like this, especially if it overlaps with a fair value gap, you can use that as well. And then, of course, we have the mean threshold of an order block as well, but that's for a different video. Now, again, on the hourly chart, we had this Asia liquidity, which was a play. So that's a use of specific session liquidity there. And then what I would be looking at for this specific day was, you might think, oh, why would we target this high, Brad? It's already swept this high. Look further left, boys, and you will notice relative equal highs. It's funny how often there are relative equal highs in the market and then how often they are targeted. I used to think that, oh, I've got to wait so long for relative equal highs to form, and then in these 2 days we've been able to find a pair of relative equal highs, target them, and be profitable by doing that. Obviously, I've not broken this trade down yet, but you can already see that the draw is correct. Now we just need an entry. Dropping down to the 5-minute chart, we can see the most recent swing highs up here. No real pullback in there, obviously, so we're going to drop down again until we can see our entry. So on this Tuesday's price action, the entry was on the 1 minute. Every other time frame, there was no swing high displaced and fair value gap drawn into until the 1 minute chart. And if you can't already see it, it is right here. There is actually an institutional order flow entry drill, or in other words, when a fair value gap is created and the next candle ticks into it and then runs off. We had that here. So that is a valid entry, although a very fast one, so you could have missed it. The safer entry, or the easier to spot entry, is the 1028 candle. And if you've watched ICT's 2022 model in the charter section playlist, you will know that about 10:30 we can expect a setup to form. And at 10:28, this setup did in fact fill you and then cleared out the high of the day, which again you could write down is a potential profit taking level, because we want to take partials. We're not just trying to hold for the full move every single day, every single trade, because you're probably going to end up less profitable than if you take partials along the way. But in this case, you can see that the full target was indeed hit again. And I'm kind of jealous that I'm in New Zealand right now, because goddamn, that would have been a juicy ass trade. And then for Wednesday's trading, you can do the exact same thing that I've just done with Monday and Tuesday's trading. There was no trade on Wednesday. It just ran up and then dropped down after the market had closed, which was actually crazy if anyone witnessed it live. But what we can note is that this week is NFP week. So on NFP week, we can expect Monday and Tuesday to be the best days of the week. And this week they were. So I would again add that into my journal / my backtesting notes. But that really is how you do it. You just go back, look at old data, look at when it worked, and then screenshot it, analyze it, and then put it into your own little backtesting journal, which you can go and then read again once you are having those tough spots where maybe you're feeling a little unconfident in your model. You're like, oh, I don't even think this works anymore. And then you go back and look at your backtesting journal and you're like, no, because it's worked all these separate times. I just need to focus on my rules and stay disciplined and stay consistent, and the winners will start to come back. That is all I have for this video, boys. I hope you learned something and enjoyed it, and I would appreciate a like and subscribe so I can get this channel to where I want it to be. But that is it for today. If you're going to be trading today, tomorrow, and especially on Friday when we have NFP, then I will wish you good luck, good trading, and watch out for NFP.